Hello and welcome to Explain the Charts. Today is February 24th, 2025, and we're diving deep into the SPY, the S&P 500 index, looking at both current events and the charts themselves to find out what's going on. Recent news indicates a rebound from the worst day of the year for the S&P 500, with futures pointing higher this Monday morning. Let's start by examining the daily chart. We can observe a recent downward trend which shows a possible bearish sentiment, although futures point upwards. Here, we can clearly see the recent volatility, with several red candles indicating price drops, and the index closing below its opening price on multiple occasions. However, we also notice some green candles representing price increases, suggesting potential short-term recovery periods. Let's look closer at those periods of recovery using the hourly chart. Focusing on the hourly chart, we can observe a series of smaller price swings within the context of the larger daily trend. The 1-hour candles provide a more granular view of the short-term price fluctuations. These fluctuations show a mix of short bullish and bearish periods which supports our assessment from the daily chart. Now, let's examine the 15-minute chart to observe even more short-term price activity. The increased frequency of candles in the 15-minute time frame offers insights into the intraday market dynamics. We're looking for patterns that might indicate support and resistance levels that we might not have caught otherwise. Analyzing the price action across all three time frames, we can identify several potential support and resistance levels. The 420 to 425 range on the daily chart seems to have provided support during the recent decline, whereas the 460 to 470 range appears to have acted as strong resistance. On the hourly chart, we can see multiple instances of support and resistance around 595 and 605, respectively. On the 15-minute chart, these support and resistance levels are even more frequent. In the short term, based on current trends and the recent news, the S&P 500 could experience a short-term bullish period. However, the larger daily trend is still leaning towards bearish. This makes it a risky bet, and there's a higher likelihood of the bearish trend continuing unless economic conditions improve significantly. Key price levels to watch include the 420 to 425 support level and the 460 to 470 resistance level on the daily chart. There is also support and resistance around 595 to 605 on the 1-hour chart, and frequent support and resistance on the 15-minute chart. The likelihood of breaking through the resistance and sustaining a long-term bullish trend is low unless a significant positive economic event occurs. If the S&P 500 breaks below 420, we could see an even more pronounced decline. But if it successfully breaks above 460 and maintains itself above this level, we might see a more sustainable bullish period. To summarize, there is a higher likelihood of a short-term bullish period. However, a larger, longer-term bearish trend is far more likely unless economic conditions improve significantly.